Gold prices have surged more than 17% since Jan 2022, while the equity market stood almost flat during the same period. A couple of factors, including Russia-Ukraine war, sustained outflows by foreign institutional investors or FIIs, and an increase in interest rates weighed the market sentiment on Dalal Street. At the same time, fixed deposits hogged the limelight with rising interest rates. What is the outlook this year? Should you place your money in gold or in the safety of a fixed deposit, or take a chance with the stock markets? We're now joined by personal finance expert Jitendra Solanki to answer some of your questions. Welcome to the show, Mr. Solanki. Which of the three, gold, FD, stock, which one should I invest in?
So ideally, it is always difficult to decide which of these three would perform, because we are talking about the future. But if I go by allocation, still I'll hold 50% in equity and rest 50% divided between gold and fixed deposit. So that's the way I'll look at it, rather than I'll look at alternatives, which one to invest into. Yes, gold looks promising, but there might be certain opportunities to invest. Still rising fixed deposit. We are in an interest rate rising scenario, so it looks very attractive. And equity markets will remain volatile, but still I'll go by that ratio, rather than investing everything into either fixed deposit, gold, or equity markets.
Mr. Solanki, many people have invested many years ago when the interest rates were very low. Should they get rid of that and reinvest that with the higher interest rates if they are looking at the fixed deposit route?
Well, if depends if the margin has been really high, so I think it might be an opportunity now to invest into a high interest rate deposit. So if your fixed deposit is giving you 7.5 to 8% now, and you have invested into 5% or so, so probably this 2% is good enough to take that strategy.
Very interesting. And interest rates are still on the rise. Should savers wait for them to rise more and be greedy, or should the deposits just be booked at the current rates? What's your sense?
No, you cannot predict, that the whole year interest rate will keep on rising or when did it stop. I think it's time to, lock your deposit at the current rate, which are really good, which are being offered now.
What about SIPs, mutual funds, or maybe directly equities? Where do you stand?
So SIPs continue. I do not think there is a reason to stop your SIPs and move the money to debt fund. Your SIP should continue. SIPs are generally investment for the longer term. They should continue. There is no stopping of SIP even if markets remain volatile.
Yeah. All right. And how do you see gold performing now? It had touched highs this year, but it's been falling since. So is there enough upside to invest in gold? Is this the right period to get in and put the money in gold?
See, gold has given a lot of upside in 2022, and we have seen a lot of erratic behavior also from gold. And the investors have been happy that gold has given return. But if you look at this year, you might see some volatility. Gold might still go up, but you might see, gold coming down in certain portions. So maybe if I look at whether I should invest in gold now or later, I'll still hold my money and will wait for the opportunity this year to invest in gold.
For a middle class investor, if I had to spread my portfolio between equity and debt, what would the spread look like in terms of percentage division?
Ideally, if you look at 60-40 has always been a good percentage.
60 for equity?
60 for equity and 40 to debt. But this year, if I look at, so maybe 50-50 would be a good bifurcation of your investments.
If you like the video, do like, comment, share and subscribe.